With the G7 summit looming in a few weeks, sources say Prime Minister Mark Carney and U.S. President Donald Trump are in direct discussions to reach a trade deal and lift tariffs. The federal government, however, is being tight-lipped about the details of those talks.
How close are you to the deal?
We're not talking about that publicly.
Trump and Carney are talking. Are you any closer to reaching a deal? How would you describe those discussions?
Guys, do you really think I'll answer that question? No, but I won't answer that question. We won't negotiate in public.
In particular, with our largest trading partner, the United States, with a number of other countries. And where that'll go, I think we need to keep an eye on as we find our way through this conversation. First, in the case of Taiwan, we see essentially a trade of multi-billion-dollar investment.
For decades, Canada and the United States shared a symbiotic economic relationship, with roughly 3/4 of Canada's exports crossing the southern border. This vast, fast, constant, and reliable trade partnership was the backbone of Canada's economy, seamlessly integrating industries such as steel, automobiles, and energy. However, in 2025, this once unshakable bond is fracturing under the weight of President Donald Trump's aggressive tariff campaign, a policy more sweeping and confrontational than anything seen during his first term. The result is, well, an economic divorce that few anticipated, forcing Canada to pivot away from its largest historical market and reshape the global trade landscape. The escalation began in March 2025, when the White House imposed a 25% tariff on Canadian aluminum and steel. This was quickly followed by a doubling of those tariffs to 50%, a move that sent shockwaves through industries on both sides of the border. As CNN's Vanessa highlighted, this major increase may be passed on to consumers, raising prices for everything from cars to canned goods. The tariffs didn't stop there. Trump announced a 25% duty on Canadian cars and car parts, with a pointed exemption for vehicles manufactured in the U.S., and a 10% levy on Canadian energy exports, a critical sector for Canada's economy. For many Canadian companies, these measures were not just another trade barrier, they were the final straw. The unpredictability of Trump's trade policies has become a defining factor. Unlike the targeted tariffs of his first term, which focused on specific sectors such as steel or autos, this campaign is comprehensive, affecting virtually every Canadian export. The message from Washington is clear: the old rules no longer apply. Canadian Prime Minister Mark Carney, during a 2025 visit to Washington, declared on camera, "The old relationship with the United States is over." His words, delivered not behind closed doors but in full view of the world, marked a turning point. Canada was no longer willing to wait for Washington to stabilize its approach. Faced with this economic upheaval, Canadian businesses and policymakers are not standing still. Companies that once relied heavily on the U.S. market are diversifying at an unprecedented pace. I just have to make sure we remind the country we're still under attack by Donald Trump. He wants to destroy every single business, bring every single business down to the U.S. But my message to President Trump: that's not going to happen under our watch. When I say our watch, the Prime Minister and all the premiers, we stand united, and we're going to make real positive changes. A pharmaceutical firm in British Columbia began negotiating deals with Asian partners, bypassing U.S. buyers entirely. A costume manufacturer slashed prices to clear excess inventory in the U.S. At the same time, a Montreal-based steel component supplier warned American clients that prices were about to double. And they weren't bluffing. Label Pack Printing, a company once heavily dependent on U.S. business, made the drastic decision to shrink its U.S. exposure entirely. "If Trump throws a 50% tariff on our goods, it will wipe us out overnight," the company stated, echoing a sentiment felt across Canada. This shift is not just anecdotal, it's systemic. Canada's leaders are actively forging new trade alliances to hedge against the unpredictability of the U.S. In late 2024, Canada finalized a comprehensive economic partnership with Indonesia, a G20 economy with a population exceeding 280 million. The deal eliminates over 90% of tariffs on Indonesian goods entering Canada and bolsters investment in critical minerals such as nickel and bauxite, which are essential for industries like battery production. Indonesia hailed Canada as a trusted partner. There's a stark contrast here to the United States' retreat from global trade alliances. Canada's broader Indo-Pacific strategy, backed by a $2.3 billion investment, targets 40 countries and 4 billion people. This diversification is both a proactive economic strategy and, honestly, a defensive hedge against a future where Washington's policies remain erratic. The early results are pretty striking. In 2023, foreign direct investment in Canada surged to over cost of goods sold, reaching a 9% year-over-year increase, while U.S. foreign direct investment actually plummeted by 28%. Canadian Trade Minister Mary Ng framed this as a deliberate strategy, saying, "We are creating predictability not as a slogan, but as a strategy." While Canada adapts, the United States is, well, beginning to feel the consequences of its policies. Retaliatory tariffs from Canada are having a significant impact on American industries. Farmers in Florida and Kentucky are witnessing a decline in demand for oranges and bourbon. Steel distributors in Pennsylvania are losing long-standing Canadian markets. The auto industry, a cornerstone of the U.S. economy, is reeling from the 25% tariffs on Canadian cars and parts. U.S. business groups from Michigan to Missouri have issued dire warnings to the Trump administration. In Michigan, where 1 in 5 jobs is tied to the auto sector, industry leaders argue that these tariffs won't protect jobs. They'll destroy them. The added costs are driving up vehicle prices, with Ferrari preemptively hiking U.S. prices by 10%, and Honda reconsidering a $15 billion electric vehicle project in Ontario due to U.S. policy uncertainty. Consumers are also feeling the pinch. Higher grocery bills, fuel costs, and car prices are becoming impossible to ignore. The once affordable vehicles rolling in from Ontario now carry a steep premium, passed directly onto American buyers. Unifor, Canada's largest auto workers union, called Trump's tariffs economic sabotage, accusing the U.S. of deliberately undermining Canadian manufacturing. Yet American producers are also suffering, as the interconnected North American supply chain unravels under the weight of these trade barriers. As the U.S. doubles down on protectionism, Canada is positioning itself as a global leader in stability and trust. Ottawa is deepening ties with the European Union, Japan, Australia, and India, offering a rules-based economy with stable leadership and treaty-backed protections. Multinational corporations are taking notice. Foxconn, the Taiwanese electronics giant, has informed investors that it is already diversified beyond the U.S. market. Semiconductor firms are scouting Canadian campuses for research labs, while Asian and European companies are investing billions in Canadian battery and critical mineral projects. Trade policy, as Canada understands, is about more than rules, it's about trust. In 2025, Canada will win that trust on the global stage. Canada's economy has shown resilience, with GDP growing at a 2.6% annualized rate in late 2024, surpassing expectations, while 75.9% of Canadian exports still go to the U.S. This figure is steadily declining. Meanwhile, U.S. exports to Canada dropped by over 1% from the previous year, signaling a reversal of the historical trade flow. Canadian firms are scaling back their U.S. sales and opening offices in Berlin, Jakarta, and Dubai, rather than Buffalo or Chicago. One Canadian executive put it bluntly, "We are telling our clients in America, your government has chosen to make you pay more. Some U.S. clients are walking away, others are grudgingly paying the higher prices." The trade war's escalation highlights a fundamental divergence in strategy. While the U.S. builds walls, Canada is building bridges, creating a global network of economic alliances that prioritize stability over volatility. Ottawa's approach is deliberate, treating predictability as a form of monetary gold. As Canadian Trade Minister Mary stated, predictability is no longer optional, it is essential. The world is responding, with multinational CEOs increasingly favoring Canada's stable environment over the U.S.'s chaotic trade landscape. The U.S., by contrast, risks isolation. Trump's aides have floated additional levies, and a spokesperson's offhand remark about Canada becoming the 51st state drew no laughs from Canadian officials or investors. The White House's threats are driving a wedge not just between nations, but within the U.S. economy itself. American consumers, businesses, and workers are bearing the brunt of higher costs and lost markets. While Canada forges ahead with new partnerships and a clear-eyed vision for the future, the question is no longer whether Canada can decouple from the U.S. economy, it's how quickly it can do so. As Trump's tariffs reshape the economic map, Canada is proving that adaptability and trust can outweigh proximity in a globalized world. The U.S. may continue to wield its financial might, but each new tariff risks further alienating its closest ally and trading partner. For now, the world is watching as Canada builds a new economic future, one that looks beyond the southern border to a broader, more stable global stage. If the U.S. doesn't restore predictability soon, it may find itself not just isolated, but outmaneuvered by a neighbor it once took for granted.